Are you a teenager eager to invest your money but uncertain about where to begin? You've come to the right place. In this video, we're about to unveil Stocks for Teens 2023, a step-by-step guide to investing. We'll walk you through the essential steps to kickstart your investment journey and provide valuable insights to help you make informed decisions. If you find this information helpful, don't forget to hit the like button and subscribe to our channel for more insightful content. Let's dive in. Step 1. Building a solid foundation through comprehensive investment knowledge. Embarking on the path of investing as a teenager requires building a strong foundation of knowledge. The world of finance and stock markets can seem daunting at first, but with dedicated learning, it becomes navigable. Begin by delving into the very basics, understanding what stocks are, comprehending market trends, and grasping the fundamental principles that drive stock prices up and down. Utilize reputable online resources, books, and even introductory courses to get a grasp on the terminology and concepts. To truly understand the dynamics of investing, familiarize yourself with financial statements. Balance sheets, income statements, and cash flow statements provide crucial insights into a company's health and performance. These documents might seem intimidating initially, but they unveil a wealth of information about a company's assets, liabilities, revenue, expenses, and profitability. Knowing how to interpret these statements equips you with the ability to assess the financial strength and growth potential of a companies you're interested in investing in. Furthermore, take the time to explore different investment strategies, from value investing to growth investing and income investing. Each strategy offers a distinct approach to building your portfolio. Learn about the principles underlying each strategy, the types of companies they target, and the potential risks and rewards associated with them. This broader understanding will help you tailor your investment choices to align with your goals and risk tolerance. Step 2. Unveiling your unique investment persona. Investing is not a one-size-fits-all endeavor. Just as your interests and preferences are unique, so too is your investing style. Delve into an exploration of your risk tolerance, financial goals, and personal values. Are you comfortable with the idea of taking on higher risk for the possibility of higher returns? Or do you lean more towards a conservative approach? This introspection lays the groundwork for determining the types of investments that suit your individuality. Consider your long-term goals as well. Are you investing to save for college, a future business venture, or retirement? The timeline of your goals influences the level of risk you might be willing to accept. A longer timeline might allow for more aggressive investment strategies, while shorter-term goals might call for more stable, income-oriented investments. Moreover, as you become immersed in the investment world, you'll discover various industries and sectors that intrigue you. Perhaps you're drawn to technology companies, healthcare firms, or renewable energy initiatives. Your personal interests can align with your investment choices, making the process more engaging and meaningful. By identifying the sectors you're passionate about, you can focus your research efforts and develop a deeper understanding of the companies within those sectors. Step 3. Navigating the vast landscape of investment opportunities. Imagine investing as a grand adventure through a landscape rich with possibilities. Once you're armed with foundational knowledge and a clearer sense of your investment persona, it's time to start exploring the plethora of investment opportunities available. Begin by immersing yourself in market research. Look at trends in different industries, analyze economic indicators, and follow the news to understand how global events impact the financial markets. Digging deeper, begin researching individual companies. This involves studying their business models, revenue streams, competitive advantages, and growth prospects. Pay attention to their leadership team, their approach to innovation, and their position within their respective industries. Understanding a company's strengths and weaknesses is akin to uncovering clues that help you make informed investment decisions. Financial analysis becomes a crucial skill in this phase. Dive into financial statements, evaluating key metrics such as revenue growth, profitability, debt levels, and cash flow. This analysis provides insights into a company's financial health and its potential to weather economic fluctuations. Moreover, exploring qualitative factors such as a company's brand reputation, market positioning, and innovation strategy complements the quantitative analysis and paints a holistic picture. By the way, if you're finding this information helpful so far, remember to hit that like button and subscribe to our channel for more valuable insights. Now, let's jump back into the steps to make you a teen investing pro. Step 4. Establishing your investment infrastructure. Imagine setting up a workshop for your creative projects. Creating a solid investment foundation follows a similar process. When you're ready to put your knowledge into action, it's time to establish the necessary infrastructure. This involves opening a brokerage account, a platform that allows you to buy and sell investments. Choose a reputable online brokerage that aligns with your investment goals. Look for factors like user-friendly interfaces, a variety of investment options, and competitive fees. For teenagers aged 18 and above, the process of opening an individual brokerage account is straightforward. However, if you're younger, you'll likely need assistance from your parents or legal guardians. They can help you open either a custodial account, where they manage the account on your behalf until you reach adulthood, or a specific investment account tailored for minors. Exploring different types of accounts is essential too. Consider a Roth IRA for kids if you have earned income. This type of account offers tax advantages and can serve as a powerful tool for initiating your investment journey with a long-term perspective. Step 5. Executing your investment strategy. Embarking on your investment journey is akin to executing a well-thought-out plan. With your brokerage account in place, it's time to select and purchase your first investments. Drawing from the research you've conducted in earlier steps, identify the companies that align with your investment objectives and strategies. When it comes to making a purchase, you have a different order types to choose from. A market order allows you to buy shares at the prevailing market price, ensuring a swift execution. Alternatively, a limit order allows you to set a specific price at which you're willing to buy, giving you more control over the purchase price. As you acquire shares, continue to monitor your investments. Stay informed about the companies you've invested in, keeping an eye on any developments that might impact their performance. Be prepared to adjust your portfolio over time as market conditions and your investment goals evolve. Guiding parents in nurturing teenage investing. Parents play a pivotal role in nurturing their teenagers' financial growth. Providing guidance and support can set them on a path toward financial independence and responsibility. Here are ways parents can facilitate their teens' investment journey. Number 1. Education together. If you're well-versed in investing, share your knowledge with your teen. If not, embark on a learning journey together. Learning as a team can be a bonding experience while equipping your teen with essential financial skills. Number 2. Risk assessment. Help your teen assess their risk tolerance. Explain the concept of risk and reward, guiding them to strike a balance that aligns with their comfort level and goals. Number 3. Account setup. Assist your teen in setting up their brokerage account. While providing guidance, encourage them to actively participate in the process to foster ownership and responsibility. Number 4. Initial investment. Consider starting your teen off with a small gift deposit to their brokerage account. This not only jumpstarts their investment journey, but also emphasizes your support. Number 5. Long-term perspective. Highlight the advantage of time when it comes to investing. Explain the power of compounding and how starting early can significantly impact their financial future. Number 6. Encourage independence. While offering guidance, empower your teen to make their own investment decisions. Encouraging autonomy nurtures their financial decision-making skills. Number 7. Matching contributions. If feasible, consider matching a portion of your teen's contributions to their investment account. This mimics the concept of employer matching in retirement accounts and boosts their investment capital. Number 8. Learning from mistakes. Teach your teen that mistakes are part of the learning process. Encourage them to analyze their investment decisions, both successes and failures, to refine their strategies. Number 9. Consistent conversations. Maintain open and ongoing conversations about finances and investments. This provides your teen with a supportive environment to seek advice and share their progress. Number 10. Embrace their journey. Recognize that your teen's investment journey might differ from your own. Their longer investment horizon allows for more risk-taking. Support their exploration while providing a safety net for guidance. By guiding your teen through the intricacies of investing and financial responsibility, you're setting them up for a future of informed decisions and financial security. You're now equipped with the basics of teenage investing. Go you! Before you go, we've got a question for you. What's the most interesting thing you've learned about investing today? We'd love to hear your thoughts in the comments. If this video sparked your interest and you want to see more content like this, don't forget to give it a thumbs up and hit that subscribe button. Stay curious, keep learning, and let's continue this journey towards financial smarts together.